Okay, IEA, infrastructure and energy alternatives, had a little bit of good news today. Stock went up right away and then has fallen back, and I kind of think that's appropriate. I think appropriate that it's fallen back. We've been a supporter of this stock, and it's been pretty rough lately. Although from when we started following it, it's up actually quite a bit, but it has come down 50% as well. So, we haven't been perfect on it. Let's get that out of the way. Full disclosure there. But we're going to stick with it. And it's basically just gotten so cheap now that I just don't think you can ignore this. So a lot's been happening. So let's get a quick review. So the company had a major shareholder liquidate their position in a secondary offering, basically sold it to a broker and let the broker deal with it at a kind of a fixed price, and then the broker had to sell those shares in the marketplace. And that hurt the stock. A lot of shares flooded the market. Stock came down. Then their next quarter came out, and that wasn't the greatest either. But there's a lot of issues, COVID and a million other things going on. So you can kind of maybe overlook that. But the long and short of it is shares are down 50%, and maybe even slightly more from their peak. So obviously you got to take a review, like, okay, why would that happen? Is it just a normal fluctuation? And you got to say no, probably a bit more to it. But I also think it's just overdone at this point. I just really think these shares are just too cheap to pass up. Let's flip right into their guidance here, and I brought their guidance page up. 175 to 195 billion in projected revenue, 130 million to 140 million in adjusted EBITDA. Okay, fair enough. Okay, that's what we kind of want to use as our guide. We'll take that at face value. One of the other things that we have to take into consideration is they did say this is kind of happening in the back half, in Q3, Q4. So Q1, Q2 aren't going to be like lights out by any stretch of the imagination. So they expect it more in the second half. So that's another thing that's kind of like hurting the stock. It's like, okay, I guess we can give you the benefit of the doubt, but in the meantime, maybe I should just be in something else and come back to this later. I think that's kind of too late for that. The shares are just down too much that they could react, before the results. Okay, having said all that, let's jump into our model and see what's going on there. Okay, here we go. As you can see, it's got a short track record, but nice track record of 20% return, 20 to 25%, or I should say 22 in 2019, 23 in 2020, and now trailing 4 quarters 25%. And that was on 123 million of EBITDA in the trailing 4 quarters. Now they're guiding for 130 to 140. Okay, so I tried to model that going forward, and we do that by putting in the rate of return and the capital growth, and then whatever the EBITDA, we calculate the EBITDA based on those numbers, and it comes out to 127 million for next year. They're only guiding for 130 to 140, so we're actually below guidance, and we really don't hit that range till 2022, and even 2023 we're at 146 million EBITDA. That's not huge. This is a growing company. At trailing EV/EBITDA, it's only 5.8 times. I mean, that's getting really cheap. A couple of caveats. I mean, it is an engineering firm. It's a little bit of boom and bust. You certainly can have a couple of good contracts, and it can change the company overnight. So there hasn't been a lot of news on contracts, although there was the news today was actually about contracts. It was 3 contracts are announced for 300 million over the next couple of years. And it's a splashy headline, 300 million It's like one quarter's revenue, almost right there. But when you look at it over 18 months to a year is kind of what those will come in, and it's 1.7 billion dollars in total revenue that's expected. They're just doing what they're supposed to do. They're supposed to go out and sign contracts. So I'm not going to put too much weight in that, and I think the market overreacted in the morning. Just saw a good headline. People bought the shares, and then when you kind of synthesize it a little bit, it kind of comes out and you go, yeah, they're just doing what they're supposed to do. Wasn't bad announcement by any stretch of the imagination, but it wasn't a blockbuster either. So look, what's the bottom line? Energy or infrastructure and energy alternatives is a growing company in a good space. A little bit of a slowdown for Q1, Q2. Shares are super cheap. We're going to stick with it. It's really Q3 and Q4. Now, if they start missing Q3, Q4, we'll change our tune pretty quickly. But we're going to give them the benefit of the doubt. Shares are just too cheap to pass up, and I don't even want to wait till the results come in because the stock is just so low now. The stock could move before those results.